Hello, let's check the basics of investing in the stock market today. Anyone hoping to increase their money gradually must grasp the fundamentals of stock market investment. Here is a thorough guide to assist you in understanding the principles. 1. What is the stock market? The stock market is a platform where investors buy and sell shares of publicly traded companies. It provides companies with access to capital and investors with the opportunity to own a portion of those companies. 2. Why invest in stocks? Investing in stocks offers the potential for long-term capital appreciation and can help investors outpace inflation. Historically, stocks have provided higher returns compared to other asset classes over the long term. 3. Risks associated with stock investing. Stock investing comes with risks including market volatility, company-specific risk, economic downturns, and geopolitical events. It's important to understand and manage these risks to mitigate potential losses. 4. Types of stocks. Stocks can be categorized based on various criteria, including company size, large cap, mid cap, small cap, industry sector, technology, healthcare, consumer goods, growth versus value, and dividend paying versus non-dividend paying. 5. How to buy stocks. Investors can buy stocks through brokerage accounts, which can be traditional full-service brokers or online discount brokers. Opening a brokerage account allows investors to place buy and sell orders for individual stocks or exchange-traded funds, ETFs. 6. Fundamental analysis. Fundamental analysis involves evaluating a company's financial health, including its revenue, earnings, debt levels, growth prospects, competitive position, and management team. Investors use fundamental analysis to determine whether a stock is undervalued or overvalued. 7. Technical analysis. Technical analysis involves analyzing stock price patterns, volume trends, and other market indicators to forecast future price movements. Technical analysts believe that historical price and volume data can provide insights into future price trends. 8. Diversification. Diversification involves spreading investment capital across different asset classes, sectors, and individual securities to reduce risk. By diversifying your portfolio, you can minimize the impact of any single investment's poor performance on your overall portfolio. 9. Long-term versus short-term investing. Long-term investing involves holding stocks for an extended period, typically 5 years or more, to capitalize on the power of compounding and ride out market fluctuations. Short-term investing, on the other hand, focuses on profiting from short-term price movements and may involve more frequent trading. 10. Dollar cost averaging. Dollar cost averaging is an investment strategy that involves investing a fixed amount of money in a particular stock or fund at regular intervals, regardless of market fluctuations. This approach can help investors mitigate the risk of investing a large sum of money at an inopportune time. Understanding the basics of investing in the stock market is the first step towards building a successful investment portfolio. By educating yourself, exercising patience, and staying disciplined, you can harness the potential of the stock market to achieve your financial objectives over time.